Hello and welcome to the Global View on this Thursday. I'm Andrew Gagan. Good to have you with us again here at AusBiz. Let's take a look at what we've seen, particularly overnight. Now, US consumer prices increasing by the most in nearly 1.5 years, prompting investor concern that interest rates will not be cut as deeply as hoped for. The inflation data put pressure on US stocks, all finishing in the negative there, although the Nasdaq did make a bit of a recovery to finish fairly flat, and the volatility index jumping to its highest level in a week. Most mega caps fell, Nvidia and Amazon slipping notably. Tesla rose, having fallen over the past 5 sessions. CVS Health jumped higher after the healthcare conglomerate beat fourth quarter profit estimates. Gilead Sciences also surging as the biotech forecast 25 earnings above analyst estimates. And Lyft shares reversed after the ride-hailing company forecast current quarter gross bookings below forecasts. So US consumer price index jumped 0.5% last month, the biggest gain since August 2023. Annual inflation coming in at 3%, while core CPI rose 3.3%. However, there was a degree of seasonality about that data, with businesses raising prices at the beginning of the year, driven by a record surge in the cost of prescription medicine and car insurance. Food prices rose 0.4%, with the cost of eggs soaring more than 15%. That's the largest increase in 10 years. Meanwhile, concern over a widening global trade war which threatens to accelerate US inflation has been increased, with President Trump expected to announce reciprocal tariffs on every country that charges duty on US imports by tomorrow. US Treasury yields surged following that inflation data, with the 10-year up almost 12 basis points to 4.65%, the 2-year climbing more than 8 basis points to 4.37%. And the US dollar also higher on that data. The Aussie currently at 62.8 US cents, and Bitcoin trading around 90 or just shy of 98,000 US dollars. Now, oil prices have fallen after President Trump promised to end the war in Ukraine. He spoke to both Russian President Putin and Ukrainian President Zelensky. Brent futures settling down around 2.5% at $75 a barrel. Copper is up 2%, iron ore up 1.8% to 107 US dollars a tonne, and the gold price initially fell after that inflation data, but has since recovered to be trading around $2,900 an ounce. So let's get across what we're seeing, particularly with a focus on US markets. Sam Ruiz joining us from T Rowe Price. Sam, great to catch up with you again.
Good to be back, Andrew.
Now, the focus clearly most recently has been on Trump's tariffs. More promise perhaps tonight is going to reveal more. How are you seeing that play out for particularly the US market at the moment, with obviously concern about how inflationary it's going to be at home?
Yeah, I mean, the inflation with the numbers out overnight are clearly showing that's not yet going to have an impact, but it's definitely getting attention. And we've had the Fed come out and basically say it might be higher for longer than people are anticipating. One thing that I'd just say is that there is potentially a lot of noise in the tariff rhetoric. Now, if Trump was to impose all the tariffs in the way that he said he will, that would effectively be 10x what he did in Trump 1.0. So we do think part of this is a negotiation tactic. We did see that with Canada and Mexico. One thing that I think is just an interesting data point is that in the first 2 weeks of office after inauguration, there was almost no mention of tariffs, despite all the rhetoric and all the big, headlines that were pushed before that. So we do think maybe things will be a little bit more sensible. If they're not, and if it's as widespread and large as what effectively he was saying, that would be akin to a global economic trade war, and that would be devastating for global supply chains. So that's not our base case at the moment, but certainly you need to think about where you're putting chips on the table in terms of which countries might be disadvantaged. But also we have the bias that we do agree it's net going to be very likely inflationary.
So, Sam, we have seen that strength in the US market, certainly outperforming when you particularly compare that with the Australian market, all based on that US exceptionalism. Does that continue in your book?
So part of that was US exceptionalism. Part of that I'd also say is that thing we've talked to death about, which was that small subset of tech companies that were doing fantastic on AI. This year's actually reversed some of that, and the market's definitely changed the shape, at least, of how that's flowing through. So we've seen a little bit of a reversion away from some of the tech stocks. partly into some of the more commodity-related sectors that have been very weak, even financials, which are a net beneficiary. Does it reverse though? We do still think that it is broadly more positive for US corporates. We've spoken to many CEOs since the Republican sweep, and it's palpable the optimism we're seeing from US corporate CEOs versus, say, Europe specifically, and even parts of Asia. So the one distinction that I'd pull out of that is everyone's aware of the big headline grabbing things such as the policy being more friendly for US corporates, eroding bureaucracy, etc., and the deregulation in particular. I'd just say that when we actually are looking at how we go forward from here, people have really said that that's more of a small cap company that benefits. But one distinction here is we're not going to see tax cuts like we saw in Trump 1.0. It's more any benefits to tax is actually for large corporates that bring business back onshore to the US. And there are very few small companies that actually have the global businesses to bring back. So we actually think net it's maybe more beneficiary for large companies, which is not really the market narrative at the moment.
So Sam, you mentioned that that pullback, if you like, on some of those tech stocks, or that reversal. A lot of that acutely felt with the release or the emergence of the Chinese DeepSeek AI player. What did you make of that market reaction? Obviously, this brings to fore perhaps a question of just how much US big tech is spending on AI and its infrastructure.
Yeah, this is something we could talk about for a very long time, but the market was really shook by this. Now, we were expecting the cost of AI to come down, and this just really fast-tracked that way larger, way faster than anyone would have expected, including us. What I'd say is we have now, much quicker as I mentioned, exited the CapEx infrastructure build-out part of AI. So to use an analogy, we've spent all this time and money, and that's why NVIDIA benefited by building the brain of AI. And now we've fast-tracked moving into the next cycle, which is about how we can actually run the brain, get the brain to think, and get the brain to think at a cost and efficiency that companies will actually want to use it. That was that whole return on investment debate around will AI actually take off if it's so expensive. Now, to give you a couple of data points on this, companies that use AI, they'll actually go and buy tokens to use AI. They buy tokens from the big hyperscalers such as Amazon, such as Microsoft, such as Google. And the cost of an AI token, so you can buy 1 million tokens from OpenAI right now. It's about $15 for 1 million tokens. DeepSeek has actually brought that all the way down to 55 cents. So this is something now people are actually going, do we need as many GPUs? Do we need as much of the infrastructure CapEx hardware that we thought we needed if the cost has come down so much? And the net beneficiary of that, so we agree you should be a bit cautious around some of those companies that were the last cycle beneficiaries last year and the year before. Now it's about, well, which companies actually use AI? And if their cost of purchasing AI tokens and running AI has come down so substantially, that return on investment debate is not necessarily over the table, but people get more comfortable with that. And the likelihood that we see new AI tools released at scale in the future has dramatically increased. So now our view is NVIDIA was a great stock, maybe a bit more questionable near term. Who are the companies now that can monetize AI? Because they're going to be in a much better seat.
So, for example, then you've sort of reduced your exposure to NVIDIA, for instance, and not looking at those firms that are applying that technology, or what you refer to as AI agents.
Yeah, correct. So anyone that uses AI today is very familiar with going onto ChatGPT or an equivalent thing and saying, write me a letter or do some small task. The next thing we're all going to hear about a lot, and I was in the Sydney airport last week traveling, and the first screen exiting security was a Salesforce thing basically saying we are going to be dominating agentics. Agentics basically means we're all going to have tools in the future that are saying, I'm going to give you as an AI agent online a very complex task, and I'm going to give you all these prompts that I want you to do, and you're going to access all these different systems like a human would, bring that all together, execute the task, make the booking, you've got my credit card details, which might sound scary, and actually execute things that make us more efficient, not just give us answers. And there's a few companies in the box seat that can really do that. Salesforce has great tools for that, SAP, ServiceNow. Again, some of these very big, predominantly US large corporates, although SAP's in Europe.
So, I mean, the premise perhaps is that given these reduced costs, it's going to make it more accessible. Demand is actually going to increase. So which companies are you seeing as benefiting from that?
Yeah, so I'll hit very quickly on that's the key debate we're having right now. So it might be bad for margins of companies like NVIDIA because people might not need as many GPUs, but does the demand now for AI accelerate to a point where it offsets the price declines? And no one really knows how that plays out. So you need to be a bit cautious about having too much of a strong binary view on this. One company I'd call out that is effectively a token buyer, using the analogy I mentioned, that uses AI is Meta. So Meta is a company that we think is actually a very strong net beneficiary of the cost of AI declining via DeepSeek. They're actually the only one of the Mag 7 that is outperforming to much of an extent this year. But they are very successfully incorporating AI to make your social media feed way stickier, to find ways where the way they put ads into your feed are actually much more targeted and more successful, and they're getting a much better payoff from that. So we speak to a company like ASICS, which is listed in Japan, so the footwear company, and just as an anecdote, they would say to us, the ability for them to get us better results in advertising has made such a step change that we're very willing to pay the extra cost of advertising they're charging us. So they are well and truly monetizing that. The other thing they're about to do with AI agents is actually through WhatsApp. So we all know about WhatsApp as maybe a little communication tool, but for small businesses now, they're about to roll out something where if you're a plumber and you're getting 30 demands a day for a quote, and the last thing you want to do at the end of the day after being on the tools is actually replying to all these people, maybe one person out of 20 actually wants you to do business for them. The new WhatsApp tool embedded for them will actually allow them to respond to customers, do the quoting, and even book the appointments so that you can come home at the end of the day, the job's done, and you've just got the calendar invite. That's an AI agent, and Meta has a huge audience in WhatsApp that they're not monetizing, which is a whole nother leg to the future revenue. So yeah, you can probably tell we think Meta's a beneficiary, but yeah, one we really like right now.
It is a brave new world. Sam, thanks for talking us through it. Thanks for joining us from T Rowe Price.
Thanks, Andrew.
Quick check of where we're likely to begin. Looking for a fairly flat opening there, as you can see, marginally higher on SPI futures. Stay with us because the open is a minute or two away.